Good evening, everyone. Hello, and welcome to the second edition of On Record with FIC as we venture into a new series, See the Money, wherein we'll be discussing just about everything from the importance of financial literacy to up and upcoming investment avenues. We, at the Finance and Investment Cell of College of Vocational Studies, operate with the sole motive of making this seemingly daunting field a bit more comprehensible and approachable for the masses.
Greetings. This is Kshitij, your host for the day. And for today's episode, we have with us Ms. Muskan Sabharwal, the head of the Student and Investment Fund at the Finance and Investment Cell of College of Vocational Studies. And our guest for the day, Mr. Monil Khare, a CFA and currently the Director of Financial Risk Advisory at Deloitte.
I guess we could all collectively agree that there's a certain magic that the field of finance possesses, with the dynamic nature, as you mentioned, and there is a lot of advancement. And so, for our audience, we'll today be focusing on the growing popularity of cryptocurrency and make an attempt to decode whether this blockchain based technology is here to stay or if it will end up like another case of irrational exuberance.
So, sir, we are all aware of the raging fire that the cryptocurrencies are in the current landscape. So, their popularity, it seems, is at an all-time high. So, based on these observations, do you feel that cryptocurrencies in actuality are the future of investing? And according to you, do they have any potential whatsoever to replace paper currencies?
Okay, cool. Thanks, Shitij. So two aspects just you touched upon that cryptocurrency and where does it fit in investing, and whether it can replace a typical paper currency that we have or fiat currency, what we call it, right? Okay. So when we look at cryptocurrency in terms of investing, investing has been a kind of a long practiced area since decades, centuries maybe. And that needs to be looked at a totally different lens, which kind of filters out a near-term, short-term volatility or probably movements in any kind of area. There are many factors when we think about investments. So the value that this specific asset class offers needs to be looked into that lens. And when we talk about that lens, if we look at the volatility of this specific asset class, it has been massive. I mean, basically, for example, one of the most popular and the highly traded coin, which is Bitcoin, has moved from, say, in the last few years from $3,000 gains to $60,000 something. So when you are investing, then definitely you would like to keep that in mind, that out of my pocket money, basically out of the net worth that I have, how much do I want to keep at risk because of this volatility? It definitely probably the signs that it has shown so far, it has very high growth potential. Many things point to it. The Bitcoin, for example, again talking about the Bitcoin, it has become one of the fastest assets to gain $1 trillion market valuation compared to, say, other asset classes. For example, when we talk about FANG, the Apple, Google, Amazon of world, it took probably more than twice a year of amount to get to this valuation where Bitcoin is. So it definitely has very, very high potential. It's a new technology, technology has always been the way to go. So in terms of value and potential, in terms of investing, it is one of the very good prospect. But how much you would like to keep in it? There's always this question of whenever kind of you go into financial markets, punting, which is gambling in way, punting versus investing always plays a part. Talking about the replacement of the paper currency, I think it definitely has a lot of potential. And if we see in the last 10, 20 years, we already have moved a lot from the conventional ways of exchanging paper notes to, say, credit cards, which is plastic money, versus electronic means of doing things, which is, we all use number of electronic ways like, bank to bank, NEFT transfers, or so there's a lot of things, and it definitely is possible that probably one of the cryptocurrencies, and there are different possibilities, like you might have heard about these central bank cryptocurrencies. So yes, so in short answer, yes, there is a good chance. When whether it's another 10 years from now or We'll only see as things move.
So coming on to the tech side of it, and I feel that all of us here can agree that we're on a cusp of digital revolution, and COVID pandemic definitely fueled that. And somehow that, do you feel that this rise in, Indians specifically, and also like other people in the other parts of the world, somehow that this,
Yep.
pandemic factored into what crypto markets are currently shaped, like the sort of people having a lot of interest in cryptocurrency, is that somehow related
Yeah.
to the onset of pandemic?
It is probably, and there are lots of evidences too. I'll go probably one by one, and probably more from a developed market or more of a structured market, which is United States. Pandemic definitely have an evidence that the percentage of retail investors, normal people like you and me, the portion of money invested in stock market has moved drastically higher during the pandemic than before. People having less to do, being more online, probably discovering more things, has definitely given them a time to probably look around avenues like stock market and and other places like cryptocurrencies, for example. I would also point to an interesting fact that interestingly, it's just not cryptocurrencies. There are more retail investors at their homes who are kind of because of the situation, the pandemic, and they have more time at their discretion, are exploring ways in investing in stocks in different places like cryptos, and they are looking for a good return from somewhere else. The interest rates have been, any Gen Z or the Gen X person probably would hardly talk about investing in an FD. I'm talking FD because this is one of the ways we do here compared to say a 30-year somebody who have been investing 30, 40, 50 years back. Interest rates are at all-time lows, right? Nobody wants to get that small return for the same 100 rupees that they put. And that's how these alternative areas, including equity, and that's why you see, lots of, probably there's so many trading platforms who are kind of are there on the TV advertising along with the cryptocurrencies. So this has got a push, move of higher. Technology got a new realization because it was a good test during the pandemic that can technology, take the test of this on totally being relied just on the technology, working from home, sitting at home and not going to an office and getting things done. So all of these factors has gone together to kind of make lots of valuations very high, including cryptos.
So that's a rather interesting viewpoint, sir. I must say it's been very well put. So moving on, let's talk about investment bubbles. So as we all know that an investment bubble is a scenario in which the market price of an asset is like much higher than can be justified efficiently by its underlying fundamentals. So do you feel that the case of cryptocurrencies currently is analogous to these bubbles, or to put it like simply, can cryptocurrencies actually hold any ground if they are being compared to an investment bubble?
Yeah, talking about the bubble, again, I'll present two sides to it. On the bubble side, it looks like, and it many times it looks like it's in a bubble. A bubble, I would say, a bubble is something which is basically assets are overpriced, or they are overvalued compared to probably what may be a fair valuation for that, and which is justified, and which has been happening, time and time again. Probably you guys were not there at that time, or probably still young to understand it. Something similar happening during the tech bubble, right? Where we call this a dot-com boom. Yeah. So internet has just moved in. Everyone is trying to publish the e-commerce website. It's everywhere. Any money anybody has, they're trying to put that into the stock market, just soared up high, and probably in a year or two, certainly realization and boom, back to normal. But that bubble still had the indications and the potentials of technology which is lying ahead. And because of that bubble, we have Amazon now, Google now, Facebook came in later. So that the technology, that the trust sustained in a e-commerce, and which is driving the market now. It's all the game of survivors. So in terms of where this crypto valuation will take us, probably we still see very high value, but is it going to be overpriced, overvalued every now and then? Probably yes, because it's such a nascent technology. I'm pretty sure probably 90, 95, or maybe 99% of the people don't understand it who invest in it. You know, they it's just kind of popular phenomena which drives them. So given these things, riding the wave versus putting the money with proper analysis, maybe after so many years, when people have understood what the cryptocurrencies are, what the value is, there has been enough time passed to where they have tested the tough times, then maybe the prices may stabilize a bit more and people look at beyond what they are. But at this point, we still have these moments of bubble and bust every now and then.
Makes sense, sir. So now we have a rather interesting questions, and coming on to the sheer influence that the celebrities host on the social media and the populace for the today's world, it's simply indisputable. And for an asset class like cryptocurrency, which is majorly fueled by the tech-savvy generation, as mentioned by you before, so there is a compulsive need of social media, and we've already seen a lot of trends where people on Reddit or people on Twitter, they've influenced the prices of cryptocurrencies. So we can see that there is a correlation between two of them.
Yeah.
So I would sum it up. So like, sir, what do you feel about the famous entrepreneurs, specifically if we talk about Elon Musk influencing the crypto market? Like, does it basically prove that crypto investors base their decisions on irrational exuberance rather than actually putting their value on something after understanding it?
Okay, I would say in this specific case, the specific business leader Elon Musk is a different business leader compared to look at other CEOs, for example, Sundar Pichai, or the other CEOs of large organizations. So I wouldn't paint the whole picture with the same color in the specific Elon Musk case, because specific to Alan, he has been kind of making controversial statements, or I would say not structured statements about not just cryptos but many other things. I mean, there have been instances where the Fed in US, and the SEC, which is the regulator, the stock market regulator in United States, they have issued multiple notices and conduct assessments on Alan in terms of the kind of views that he put. And it has not just impacted cryptocurrencies movement, it has impacted the Tesla stock prices itself at many places where he kind of pointed out that what does he think about a specific manufacturing unit, what does he think about the outsourcing from China. So in this specific case, I wouldn't say that this is the only driving force, because I don't think Elon Musk is such a big investor of the overall crypto market globally, that probably he can have such a large influence compared to, say, a Warren Buffett making a statement about the global economy, where he can actually kind of invest and controls a lot of stocks all around.
Makes sense. So on that note, sir, I think we can effectively conclude this conversation. So I'd like to firstly thank you for making the session so insightful. And then I'd like to extend my heartfelt gratitude to all the listeners who tuned in. But before we call it a day, sir, could I just take a moment of yours to gauge how your experience was like interacting with us today?
Oh yeah, thank you. Good. Thanks, Shitin. It was, nice 45 minutes. I actually didn't know when these passed. So that kind of says a lot, the kind of intriguing conversations we had. And the topic is one of the things which everyone is talking about, thinking about. So, and well organized. Thank you for that.
That's pretty much it, sir. Thank you so much for your time. So here's us signing off from this episode, but that's not all. So we would like you all to stay tuned for more such chapters on finance. It's our guarantee to keep all of you fanatics hooked till the very end. Until next time, guys.